Welcome to LPA Logical Price Action, the complete course, Session 8, Advanced Concepts. Please take a look through the disclaimer and also copyright. Please don't share on any file sharing sites or torrents, etc. Today's agenda: disconfirmation and confirmation of either demand or supply. And this is using logic. Very interesting tool. We will cover absorption, a personal favourite, in its entirety with various case studies. I do like absorption, very much an advanced technique. We will learn how to read an apex, and more often than not we'll be able to position ourselves by reading the inside of the coiling, the creating of cause. And then finally we have a change of behavior. This includes the waves, when we study in waves or legs, which it encompasses momentum. And I must share with you the Shell Divers Strategy, which is a classic Wyckofian setup which fits in nicely with these waves and momentum. All will become apparent. Let's begin with disconfirmation and confirmation of demand and supply. You have heard me say many times through our sessions, through disconfirming supply we get the confirmation of demand, and vice versa. Through disconfirming demand we get confirmation of supply. What exactly do I mean? Don't worry, this is nothing too complicated. We need to apply a simple piece of logic. For example, what should happen at support? If price is coming down like so, like this, and we touch support, we would expect price to come down and rally, so we should bounce. Now, what happens if we don't take off and we start to hug support? So we come down like this, we don't rally, and we hug support. Now when we hug support, we can use our new firm skills of our bar analysis. So our buying bars will be narrow, the spreads will decrease, the closes get weak, and volume declines. It's very sloppy price action. For example, so we're coming down with these nice bars here, and we may have a little bar like this. We might push up like this, we might come down. You know, we don't see good demand, and especially if the volume is like so, and we're coming down with these nice wide spreads with volume which is increasing. This is very sloppy buying at support. Okay, so we are disconfirming demand, therefore we get the confirmation of supply, and that is very important data. We may look to price action for evidence of supply or selling. We're looking for an opportunity. If we come down like this, good selling, we hug support. We may want to see a break, and more often than not, if we do break and we have a wide spread, we can look for a weak rally back to here, which is the rally to ICE setup. Alternatively, I have seen this many times, if we have a very large wide spread that breaks after we've disconfirmed demand at a support level, and there's a brief rally, we may want to sell stop the lows of this wide spread, because if the market is indeed incredibly weak, there won't be enough force to drive the market back up to support, which would be our rally to ICE setup. So if we rally to here, we can just sell stop the lows and let the market pull us in. However, our stop still has to be above support, so we're paying for that confirmation. Obviously it's contextually dependent, but if it's within your risk reward or within your account size, then by all means we can take that trade. Because the last thing we do is, obviously if we're coming down and we have increasing spreads and good volume on the way down, then we have our sloppy buying where we disconfirm supply, we disconfirm demand at support. So we think it's going down. We don't ever buy here. We don't ever sell here. We don't sell into support. That's dangerous trading for obvious reasons. We want to see continuation of the selling. So through disconfirming demand at support, it perks our ears up for a potential trade. And in our mind's eye, we're looking, okay, we come down with good selling, we're disconfirming demand, therefore we have the presence of supply. Now we want to see supply act. And then obviously we can gauge the quality of selling, more importantly, the quality of the preceding rally, and then we can have a trade opportunity. Good. We can use the same logic with setups. For example, we have, this is resistance. We push up and we print our up thrust. Now, from an up thrust, this is a bearish setup and we expect price to go down. So what happens if this next bar dips down, reverses close firm? Dips down, up, 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 down here, down, up. So what is going on here? This is a lot of chop. This is not what we would expect from a bearish setup, especially if we can see these down bars. If these down bars contain very low volume and we can see there's increasing volume on the up bars, something is wrong. Therefore, we are disconfirming supply at resistance. And again, that is very, very important data. Why? Well, because if we're short from this up thrust, and there's nothing wrong with the up thrust there, this has, we can see that spreads decline and volume decline, so it's a weak rally, and then we print this lovely up thrust bar with a good spike in volume, but for whatever reason, we cannot react. And we've noted that the preceding down bars have very low volume and the up bars are increasing in volume, and we can't react. Something's off. We are disconfirming supply and therefore get the confirmation of demand. We don't wait for our stops to get hit. The market has other ideas. We can simply exit. There's always another trade. We gain from this type of analysis. If we are short, if we have this preceding action, it tells us to scratch the trade immediately. Alternatively, look for a reversal play. We want to now be looking to be a buyer because we're disconfirming supply at resistance. Or alternatively, our ears are perked and we look for demand related bullish setups if we trade through this resistance, which of course should now turn into support. Of course, this is contextually dependent and we need the correct background conditions. But this is a simple yet potent tool of analysis that is often overlooked by most traders, even in the Wyckoffean realm. So hopefully you're beginning to understand and see the power. The market can on occasion provide key bars at structural locations that will also confirm or disconfirm demand or supply. For example, we rally up like so, spreads narrow, volume declines. Then we have this bar here, very low volume, very narrow spread, which is no demand at resistance. Now, of course, for obvious reasons, this helps us going forwards. Why? Because the odds favour that this resistance level will hold. We can gain data. If we're long from down here, for whatever reason, if we're long from down here and we see no demand at resistance, and we know this is going to hold, we want to A, take partial profits, B, fully liquidate our positions, or C, if there is no position, we're looking for a reason to go short because we have no demand at resistance, which we know from the individual bar we're disconfirming demand. This is a very powerful tool of logic. It helps us to think like a trader. I mean, this tool is far from a setup. Yet it's important to understand that we can read, or should I say that we can disconfirm supply and demand, as in essence we are demand and supply traders. So if we can disconfirm demand and supply at structural areas or important bars or in setups, we gain an edge. Good. I see no questions. On to absorption.